Hello and welcome to the last update for 2021. Before I go on, a bit of a disclaimer. Nothing I say today is to be taken as personalized financial advice. I do not know your financial circumstances. So if you want advice, please do get in touch with your financial advisor. If you do not have a financial advisor, please do get in touch with us. Today is for information only. And while I've taken all care to ensure the information I present to you is accurate, I cannot guarantee the accuracy because I'm dependent on third party sources. If you decide to act upon anything you hear today, you cannot hold me or Saturn or anyone at Saturn liable for the financial outcomes, particularly not for a negative financial outcome. So, with that, it is goodbye to 2021, and hopefully for lockdowns. We are definitely seeing more freedom here in New Zealand, which is great. It's timely for the holidays, and let's just hope it stays that way. Globally, we've got the threat from the new variant of concern, Omicron. It has, I mean, we were already witnessing some increased restrictions in parts of Europe, but Omicron certainly is causing a few more problems on that front. UK recently has reimposed some social restrictions. The government is encouraging people to work from home if, wherever possible and minimize their social interactions. The key part again remains to be seen is whether this becomes a widespread trend. So far, the reports suggest that Omicron may be much milder than initially anticipated, but it's early days. Let's hope that is the way it is. My personal expectation has been that there will be variants of concern for COVID year after year, if not every few months. But we just need to learn to live with this. It is a new disease that we have to deal with, just like the hundreds of diseases that we already deal with. So I think with time, Omicron and other variants that we that come to the fore will not really have as much of an impact on our lives as COVID had, um, last year and this year. So uh, with that, let's just move on to the financial markets. The markets have been strong. I suggested that they would be strong at the last update going into the holiday season, and they were strong, but obviously they were disrupted with the news of this new variant Omicron. So the markets really, went down, took a dive when news broke of this new variant, but then they bounced back really, really strong, and they're back to the levels where they were a month ago. So back to near record levels, which again endorses my view that uh, as a whole, as a race, mankind is becoming more resilient in the face of COVID, and we are moving past COVID. Investors obviously panicked when news broke of Omicron, but then recovered very quickly. It was a matter of days, not weeks, as was the case when COVID first broke a year ago. So I think we are going to continue to move past, and we've got more capacity in our healthcare sector. We did not have as many ventilators 18 months ago as we have now. Um, we've got tools, we've got vaccines, we've got therapeutic drugs. The combination of all of those will minimize the impact of current and future variants. And obviously, residual immunity will continue to go up with more people contracting and recovering from the variants, as well as getting booster shots. There will be, in general, a more resilient population, and in that case, people will move on with their lives without having to worry too much about COVID at some stage. Whether that's going to happen over the next few months or in 2 3 years is yet to be seen. My belief is it's going to take at least a couple of years, if not a bit longer, before we not really worry about COVID. But on to the economic stuff, the other main question that I've been getting from clients is high inflation. And, sure enough, inflation is really high. The US inflation recently came out at 6.8%, which is a multi-decade high going back all the way to 1980. Some of you would remember those days of, inflation being that high and higher. Some of us have read about it, but that's not where we are headed. The general expectation, my expectation, as well as the economists and strategists that I've read and listened to, the expectation is that inflation is going to peak at about this level, maybe a bit higher over the next few months, and will normalize to about 3, maybe 4%, somewhere around that, which is going to be much higher than where it has been, where it's been practically non-existent over the recent years. But inflation in itself is not the villain. I've said that before. It is necessary for sustainable economic growth. So if inflation sort of normalizes around about 3%, 4%, this is going to be really good for sustainable economic growth. But what is going to normalize inflation, help normalize inflation? So there'll be obviously central bank policies. Tapering is already underway. Money supply is being pulled back a little bit by central banks. Not a little bit, it is being pulled back. And then interest rates, most central banks will initiate, if they haven't already embarked upon raising interest rates. So with the rising interest rates, pullback on money supply, I think that is going to dampen inflation. But one more factor I want to mention before I close off is inflation has been driven by the high demand for goods. We went into lockdown, demand fell off, production fell off. Well, businesses curtailed on their production capacity because there wasn't demand when we were in lockdown. Then we started coming back out of lockdown and people started spending quite a bit of money on goods. Services were still not there, and they're still lagging a bit, but the demand for goods came back really strong, and businesses struggled to ramp up the production capacity in response to that. So that created a bit of shortage. So that fueled up inflation. But I think that's going to normalize as consumer will start spending more money on services side of things instead of just spending money on goods. And also, the supply chain issues with shipping industry bottlenecks, that did not help. And it is expected that that will also normalize going forward. So with a rising interest rate environment, asset valuations will be negatively affected, but not in general. I expect that in general markets will be okay unless the central banks start raising interest rates really, really aggressively. But there will be pockets in the market which are really high growth oriented, may not be generating cash flows today, but their valuation is very much tied upon the expectation of high cash flows well into the future. Those pockets will be hit much harder in a rising interest rate environment. So but in general, I think we are headed towards a very sustainable growth period. And if companies can continue to generate earnings and grow their earnings, well, there is no reason why their valuations will not be sustained and will not increase. That's about it for this update. If you've got any questions, please do get in touch with your financial advisor. If there's anything specific you want me to address in future updates, do get in touch with me. And we are, approachable as a business. Do check out our website. There are some really good updates that are posted there. Take care, everyone. Have lovely holidays. Enjoy some quality time over Christmas with your loved ones. And I'll see you in 2022. Bye.